Our next witness is Ms. Carol Wayman. She's the Senior Legislative Director of the Corporation for Enterprise Development. The CED is a leading nonprofit association dedicated to expanding economic opportunity, helping Americans start and grow their businesses. Welcome.
Thank you, Chairman Schrader, and thank you, Ranking Member Buchanan and members of the subcommittee. It's an honor to testify today in support of the Small Business Administration's microloan program. We'd like to thank Chairwoman Velasquez and the administration for support for the SBA microloan program and making it a priority and helping to improve the economy and create jobs. CFED knows that self-employment can build wealth for low-income and minority families, and we strongly support the SBA microloan program, which provides capital, training, and technical assistance to disadvantaged entrepreneurs. Since its authorization in 1991, this program has continued to receive bipartisan support, and we believe that the draft legislation under discussion provides an excellent opportunity to strengthen a program that reduces poverty and creates jobs. I have 5 points to make on the legislative proposal. First, we are pleased to see that the subcommittee has included language that allows microloan intermediaries to offer more flexible credit terms, such as lines of credit. Second, we welcome language that expands eligibility requirements for prospective microloan intermediaries. We agree with the subcommittee that SBA should have the discretion to determine the type of experience necessary to become an intermediary. Third, we are pleased to see the subcommittee recommend increases on the cap on borrowing by intermediaries. Many of the highest performing intermediaries in the microloan program have reached that $3.5 million limit, and more businesses are coming back to them to loans and they can't make loans that they'd like to make. So the recommendation to increase it to $10 million is something we strongly support. Fourth, we are pleased to see an increase in the maximum loan amount that an intermediary can make to a borrower from $35,000 to $50,000. We think this increase reflects a key market reality. The investor return on a $50,000 loan is frequently deemed too low for most mainstream financial institutions. I note, however, that the majority of microloans remain small at about $13,000. Lastly, we support the proposal to increase the percentage of technical assistance grants that may be used for providing information and technical assistance to prospective borrowers. We also support the proposed increase in percentage that microloan intermediaries can use for third-party technical assistance. In this economy, microloan intermediaries need flexibility to serve future entrepreneurs instead of the current restriction to provide technical assistance mainly to current borrowers. We also recommend the subcommittee consider the following 4 changes to the microloan program as part of any final legislation. First, we'd like to lower or remove the loan loss reserve requirement. Intermediaries in the SBA microloan program must maintain a 15% loan loss reserve fund that really results in unnecessary levels of passive capital. The SBA microloan program has made loans that no bank would dare take on, and yet has the lowest default rate of any SBA lending program. While SBA regulations allow this requirement to be lowered to 10%, the microloan program is the only SBA lending program that requires a loan loss reserve fund. And this limitation forces the SBA to limit its best performing program. Second, we would allow the use of one-time use of SBA microloan funds for microloan intermediary capital improvement projects. This enables these high-volume intermediaries to expand and improve their facilities to meet increased demand. Third, we recommend eliminating the requirement that intermediaries cannot operate in more than one state without prior and burdensome approval. Permitting multi-state use of microloan funds will facilitate regional economic development. And finally, we'd like to expand SBA reporting requirements. Unfortunately, SBA provides very little information on the microloan program. Without data, it is very difficult for the microenterprise field to target areas for improvement and efficiency. Ideally, we would like to see annual SBA reporting requirements such as loans made, loan dollar volume per intermediary, credit score improvements, and jobs created. In closing, we would like to thank the subcommittee once again for the opportunity to testify today, and we look forward to partnering with Congress and the administration to enable low-income entrepreneurs who are ready to go from business curious to business capable.